Don't invest with debt. Don't invest more that you can lose. And I'm going to take it one step further, because I think for 90% of people out there, regular retail traders, investors, you don't need to be buying individual companies. Just put your money into a low-cost ETF, into a low-cost index fund, and that's it.
Facts. What are those, though?
And so,
Jaspreet, most people don't know what that means.
So let's break that down. So an ETF is an exchange-traded fund, and it is literally a group of companies, a basket of stocks. So instead of you going out and investing in, let's just say, McDonald's, the corporation, and now all your eggs are in McDonald's, meaning all of your money is in the investment in McDonald's. So if McDonald's goes up, you can make a lot of money. If McDonald's goes down, now you're going to be panicking because your whole portfolio is down. Well, the issue is you have the most upside, but also the most risk. Because if the executives at McDonald's run their company into the ground and they go bankrupt, your whole investment's gone. Now, if you invest into something like an ETF or an index fund, which are very similar to each other, now you have a group of companies where now it might be McDonald's and 499 other companies. So now what happens? You lower your risk, you lower some of your upside, but you also lower some of your downside. Because now if you run through that same scenario where the McDonald's executives run the corporation into the ground and they go bankrupt, well, you got 499 other companies in the portfolio, so you're okay. And so then what can happen in a low-cost ETF or an index fund is they have computers, and this is automated, where they will kick out McDonald's because now they're no longer fits within this 500 companies, and then they'll put in another company to take the place of McDonald's. So now it's passive on your end, because if you're not willing to put in the work to do that active investing, to do that sort of fundamental analysis, meaning listen to the earnings calls, study the revenue, study the profits, study what the corporation is doing. If you don't care about doing that, if you don't want to do that, and if you're not willing to do that, don't invest in individual companies, because now you're taking on all the risk, hoping for some upside. Versus you can mitigate a lot of that risk by just investing in ETFs or index funds, and you can do this right off of really any stock brokerage app out there, and now you can buy them. Now, how do you buy them? Well, two strategies, passively or actively. Passively, which is a great strategy, is now ideally every week or anytime you get paid, you put a little bit of money automatically into this ETF or index fund.
What system do you use for that?
So I use a platform called M1 Finance. There's
M1 Finance?
M1 Finance. There's tons of brokerages out there. You can find whatever one you want. Where now it is completely passive. Money is automatically pulled out of my checking account on Wednesdays. You pick the day, doesn't matter. And it's automatically invested
known
into
as dollar cost averaging.
Dollar cost averaging into my portfolio of ETFs. So I have a number of different ETFs in there. Happens every week, whether the market's up, whether the market's down, and I don't touch it. It just does its thing. The active side would be now you're looking for a good price point. And this is where it gets a little bit more advanced, where if you're willing to do the research, you can pick ETFs or index funds where if you see a big crash, you see prices go down, you can put more money in. Or now you can start looking for good companies that you believe are undervalued. But again, this now gets a little bit more advanced where you have to be willing to
Can I ask you a
put that work
really
in.
blunt and interesting question?
Yeah.
The average person, they're not financially literate. Would you rather, if they had $1,000, would you rather they play blackjack or try to actively trade that money?
Play blackjack or actively trade that money? Don't trade. I think trading, unless you want to do it to learn, I traded. I'll give you my personal experience.
I know you would trade because you know what you're doing.
Well, I wouldn't trade. I would invest.
Even you wouldn't trade. Would
I don't
you?
trade.
Your only options, blackjack, active trading.
So explain that to me,
Average
because I'm
person.
not a casino person. So blackjack is the one where you go to 21.
Oh, you're going to lose either way.
Or you're going to lose either way.
The reason I bring this up is I really think that the average person would be better off taking their $1,000 to Vegas and playing blackjack because it will be fun. If you try to actively trade, you're going to lose your money. Now, is that 100% of the time? No, of course not. But Ray Dalio, for people that don't know, runs the largest hedge fund in the world. Right. When he explains this, I'm like, oh my God, I'm never going to try to active trade. He said, you're going up against people like me. I spend whatever, $200 million a year on research.
Yeah.
And I have AI, which is making trades in milliseconds. Right. We know how fast the fiber optic cable is to make sure that our trades go through slightly faster than the other person, which can be the difference between, a percentage point, which could be millions of dollars. He was like, you're going to lose. And he was like, it's hard for us. And we've got whatever, 1,500 employees, like I said, AI that they've been building for the last 25 years, fiber optic cable, measuring things in milliseconds. He's like, the odds of you finding something that we haven't already traded on is basically zero.
Yeah.
Every person that I know, this is a very small sample size, I'm well aware of that. Every person that I know has lost money on a long enough timeline actively trading.
Yeah.
The only people that make money are people and I will use my language. This is how I think about myself. I am too stupid to beat the market. I'm too stupid to beat Ray Dalio. That's for sure. And Ray Dalio's entire team and AI and all that. So actively trading is off the table just because I know it would be like me trying to play professional soccer.
Right.
I'm going to get my ass handed to me by Messi. The difference between me as a footballer
Yeah.
and Messi is the same as me as an active trader and Ray Dalio, right? The gap
Yeah.
is so catastrophically large that at least playing blackjack, I would have a good time.
I think the difference is now differentiating active trading versus active investing.
100%.
Because trading, I tried trading one summer in college, and I spent every day staring at charts, candles, which are these little ways that you can make a stock chart, and you get glued to the screen, you get glued to the emotion, and it is very difficult.
Yeah,
And
watching candles is emotionally
It's
addictive.
addicting. And so I stopped it because I
probably
realized I was never going to make any real money doing this. Active investing, what I mean by that now is you're looking at companies, and when you see this company fall because the whole world is getting scared, the whole market is tanking, well, now this is an opportunity for you to come in, buy a great company at a discounted price, and then you just hold on to it.
Now, would you do that at the company level or at the ETF index
Now,
level?
again, who is the person? For me, I would do it
Average.
at the company level. For
'Cause
the
like-
average person, do it at the ETF level. Because, again, you have to be willing to put in the work to research companies, keep up with the earning statements if you want to buy and hold for the long term. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.